The US markets, US stocks closed about 1% higher on Thursday, led by tech shares. This comes after weekly jobless claims figures pointed to improving labour market conditions. This positive surprise came a day before the closely watched monthly payroll report. The European Central Bank, the ECB, also lifted sentiment, putting the S&P 500 at another all-time high. ECB held out the possibility of further action if necessary to boost the Eurozone economy. Jobless claims fell sharply in the latest week, dropping to their lowest level since the early days of 2007-2009 recession. Finally, at close, the Dow Jones was up about 130 points, S&P 500 was up 15 points, and the Nasdaq was up 40 points.
Look at Asian markets. What do we have there? Japan is shut. SGX is trading with a positive bias. Hong Kong is doing nothing special. And China, well, if the Chinese economy is contracting, needless to say, that will have an impact on Chinese equities, because Chinese stocks have lost some ground, and Shanghai Composite is looking strong today. But if I map the recent performance for Shanghai Composite, China clearly seems to be emerging as one big underperformer in the entire region. The global strength minus China is absolutely impeccable, even though the global news flow is not all that strong. Germany is contracting, US GDP numbers were below estimates, China seems to be in a mess. Global equities are still holding on. That just tells you that globally there is a lot of money which is chasing equities as an asset class. So what exactly are experts believing in? Let's hear out experts from both sides of Atlantic who believe that the state of global economy is still slightly precarious.
We have a bit of a difficult economy because we aren't doing all the right things that we could to grow it. Everybody wants to grow it, but people seem to have different ideas, and we have a regulatory burden now that's starting to make it difficult for business people to make decisions. And so why that hits at this time of the year, I always find it a surprise rather than a pattern.
A central bank can do. Having said that, the fundamental structural problems in Spain, Italy and elsewhere is really for governments to do the heavy lifting. The ECB cannot introduce Eurobonds. The ECB cannot instruct Madrid, Rome to engage in labour reforms. This is for the government to take responsibility. So there is more that the central banks can do, even the ECB, but there are ultimate limits.